How do things pan out from here on? Let's welcome our guest for the morning, Dr. C.K. Narayan of Growth Avenues. Morning, Dr. Narayan. Thank you very much for joining us. Well, the bulls and bears have been battling out at 8450. What's your sense? Do the bulls prevail over? Should today be long positions?
Well, I think what we have right now is, a kind of a boundary which is defined by the grease. Let's call it the grease wall, for example. You had, let's say, a couple of weeks back, you had this big downside gap, which actually created the lower end. And then last week, we had another downside gap. Now you find that the index is actually trading between these two gaps. And it's up to the market now to kind of decide whether this grease matter is kind of behind it. That will be part A. Part B will be, is grease getting behind us good enough for us to stage a further rally? Or do we need further by way of some fresh inputs? Fresh inputs could be this Iran deal, which might send oil prices down, but you had your expert right now saying otherwise. But what we have is a very definite movement on the charts of the oil to the downside after having consolidated near the $60, $65 range. I think the way oil is poised, it is going to go down, so oil could be a good news for the market. The market has zero expectations from the quarterly results, right? So it is possible that the markets could get positively surprised by some set of stocks, IndusInd Bank, etc., for example, which came out with results which were slightly above market expectations. Market will bide its time to look at a series of names prior to making the move. But as things stand now, the grease wall at the higher end, which is near 8500, is a lot nearer for it to scale past. And I think the lower end of the wall near 8200 is also pretty strong. So I don't believe we are really going to go down. So my bias would be to lean on the bullish side. I would use any positive news, and if the market were to react positively to that news, as a kind of confirmation that the market wants to go higher rather than lower.
All right, Dr. Narayan, morning. You have a couple of stock ideas that you've identified for us. From the heavyweights, you have a buy on Reliance. Take us through what your target price and your stop loss will be.
I think Reliance has been faring pretty well. It had a pretty strong up move and it has managed to sustain at the higher levels. Now, for a while, we are seeing it stay above, let's say, the 1000 rupee level, which had not been seen for a while. So I think at about 1005, it sort of merits consideration for a buy. My expectation would be that it will build gradually, but in the short term, let's say looking at it for the rest of the week, I would think maybe about 1030, 1040 is definitely on the cards. For this, I would want to maintain stop somewhere at about 995 if I am a little aggressive, or maybe even give it a little room and set the stop at somewhere below 990 as well.
All right. I noticed the other buy you have on your list is Darbar. Does this generally apply to FMCG stocks? And is Darbar the best of the pick, or you won't extend it to the sector?
I think you could say that because you are seeing some bit of traction across the board in the FMCG pack, particularly if you saw the way Hindustan Lever moved yesterday. It was kind of pick of the lot yesterday, and it moved pretty aggressively and has also staged a kind of breakout. But I think chartically, if you look at it, Darbar is in the best position, having moved to all-time new highs. And the breakout is decisive. It is being accompanied by a good amount of volume, good amount of build-up in positions in futures, etc. So I would, hitch my cart to Darbar as a horse and would want to ride it out substantially higher. For the week, I would look for a target about 318 to 325. But if one is looking across the month or even out, then I think 360, 365 seems to be on the cards as well.
Okay, so buy a Darbar with a target of 365. When do you expect that? In the
I think that should probably take about 4 weeks, 4 to 5 weeks.
All right. Let me just complete the Nifty argument. Is there a target and a stop loss for an intraday or an intra-week trader?
Well, intraday, I think I would be looking very closely at about 83.20, 83.30 as my nearest stop loss if I were to be a intraday player. So it has moved far away, right? So the stop losses won't move as quickly. So if you want a nearer stop loss because you can't afford these kind of distant chart-based stop losses, then I'm afraid you'll have to set it on a monetary basis because there isn't a chart-based stop loss available nearest. 8415, which was a kind of a pivot for a couple of sessions, is what I would peg it nearest. But closer than that would be difficult to find on the charts.
Okay. And is there any take profit time? You know, I mean, 8510 was where it turned off last time.
Yeah.
So anything like that?
I think if it were to go above 8505, 8510, I really wouldn't be in a rush to take profits.
Let it run.
But then the fact remains that people don't need advice to take profits. They are most happy to do so whenever they see it. So what they need is more of a caution on where to set the stops.
Okay. The other stock that you have a buy on this morning is Windmills. That one has also been doing quite well. What kind of a target price would you ascribe there?
I think Arvind is well on its way to check out the 300 levels again in the shorter term across the next couple of sessions if the market were to remain up. We were looking for a pullback to say about 260, but the last few days when the market has been a little dull, Arvind has actually chosen to remain sideways and consolidate its recent gains. So at about 284, 85. Maybe a near-term intraday player could look at about 290 as a resistance, but I think somewhere closer to 300 is what I would expect before Friday.
Okay, there are two sets of stocks I wanted to advise on. Bank Nifty, that's been a kind of a relative underperformer or a market performer. It's not outperformed. Is there any call on that index? And then the oil stocks. Is it time to take profit or should you let your trades run? I would assume there are long positions open.
Absolutely. First on the Bank Nifty, I think very decisive position building between 18,500 at the lower side and 19,000 on the top side. This is what has been indicated to us by the options OI position. Okay. 19,000 very definitely seems to be having some sellers present at that level. But recently, very recently, last week, last 5-7 days, the Bank Nifty had shown some promise of outperforming this. I spoke about the grease wall for the Nifty. Coincidentally, the Bank Nifty also has a similar wall, but it's actually above the wall. So Bank Nifty today, as it stands, is actually in a better position compared to the Nifty.
So you'd be bolder to take longs there.
Absolutely. I would. The only caveat I would add there is that I would watch the private sector bank stocks to find a little bit of mojo during the day. That is what would help me, take my decision.
And oil stocks, will you take profit in HP, BP, IOC, any of them?
The correct answer would be no.
Okay.
Yeah, because the cliche is allow your profits to run. And right now, I think the big players are clearly in HPBP. The smaller guys are all out of it with 5 rupees stop. And I think it's just not halting. And whatever be the reason, we'll always ascribe some reason to it later. But the fact of the matter is you should have a trailing stop. Set something as, let's say, a 2-day trailing low. That could be as near as you can get. But even that is not getting tripped up in HP. It's, on some kind of a tremendous run. So I think the prudent thing would be to take all that the market is willing to offer you.
Just one final chart check on DCB. That one has been a great performer, but yesterday, post its earnings, it slipped about 6%. For someone who has a slightly longer term view, what would you do?
I think people with a longer term view in DCB should remain very firmly invested. It's one of those really sort of tiger performances from any banking stock that you have got. It's been pretty low profile. It's not really spoken about too much. But I think the way the stock has moved, all the big players have it in their radar or in their portfolios. And this may be some light profit taking because every now and then you do need a reason for a sell-off and a reaction. So maybe the results provided it for a bit, but I think any lower levels would definitely attract fresh amount of buying, and therefore investors should remain locked into it. Okay,
just to add, your long call MRPL, I didn't ask you, but I suppose the same argument holds because that's at 52-week highs.
Yes, it is at a 52-week high, but MRPL chart is a little different in the sense that it's a kind of recovering stock, right? Whereas if you take DCB, HPCL, etc., they're all running stocks. So the kind of momentum that you will get in a recovering stock is a lot different. Plus, it needs a lot more effort to continue that upward traction. So news flow would be very critical. Large player interaction in that stock would be very critical. I think at the moment the chart is kind of revealing to us that both of these are present. but not in a very overt kind of way. But if it were to keep up, I think we should see the chart situation improve. But as things stand now, it's a stock to remain long in.
All right, Dr. Narayan, thank you for stopping by. You have a good day. Here's a quick recap of C.K. Narayan's stocks for today. He's recommending buying Reliance Industries with a target of 1,030 and a stop loss of 995. He also recommends buying Windmills with a target of 305. And finally, he recommends buying Darbar with a target of 325.